Hi there, welcome to Kneppy Invest. Exactly 1 year ago, I did my very first research on REITs, and the very first REIT I did look at was called Dexus Convenience Retail. And the only reason that was the first REIT I looked at was because it was the first REIT to release their financial year 22 results. Now, as I speak, just after noon on August the 9th, we have seen 4 REITs release their financial year 23 results. And I'm going to do a video on those 4 REITs today, just to have a quick look at their presentations in regards to their results. And the main reason I am now having a closer look at REITs is because this space is starting to look way more interesting. In particular, when you look at the valuations of these REITs. Now, the REIT space has seen some significant headwinds over the past few years, particularly because of rising interest rates and over the past maybe year, falling property values. So I'm going to look at some key metrics of these REITs and paying particular attention to NTA, also look at the share price of these companies and look at whether these companies might be attractively valued right now. So if you don't know what REITs are, it stands for Real Estate Investment Trust. These sort of investment vehicles are quite popular right now. In fact, they've been popular for a long time because Australians tend to be fairly obsessed with property. And these are really good alternatives than or over buying your own property, in my opinion. So the 4 REITs we're going to look at in today's video are Dexus Convenience Retail. And this REIT has a soft spot in my heart because it was the first REIT I looked at. And then again, the only reason I looked at this REIT first was because it was the first REIT to release their results. And that's true again for financial year 23, the first REIT to release their results for the financial year. Also have a look at Charter Hall Long Wale, Dexus Industria, and one REIT I've never heard before, Newmark Property. Now, one of the reasons I like REIT names is because what the REIT is invested in or where they have their assets is in their name mostly. So, for instance, Dexus Convenience Retail, they're all about convenience retail. So, we're talking about those fuel stops alongside the highways where you fill up your car, eat breakfast or lunch at McDonald's or whatever. Those are convenience retail. Charter Hall Long Wale is all about having assets with a long life long life lease expiry, which is a Wale, WALE, weighted average lease expiry, and that is attractive to some investors because of stability. If you have an asset with a long life lease, then there's a bit of stability there. Dexus Industria, it's all about industrial, and that area of REITs tends to be more highly thought of, particularly when you compare industrial to office, which is understandable because I do think, in my opinion, office and CBDs, that sort of thing, is under significant threat. In fact, I think maybe in 20, 30 years, there will no longer be CBDs, or there will be CBDs, but offices won't be in CBDs. In fact, I think more than likely it's going to be for residential. And Newmark Property, never heard of it before, but we'll have a look at what they or where they have their assets. And first time I've ever have looked at Newmark Property. Anyway, what I'm going to do is just go through the REIT's presentations. And I actually did have or enjoy going through these presentations for some reason. Also have a look at the charts, very important charts, and also have a look at Charter Hall Long Wale, what's it called? Charter Hall Long Wale, Guru Focus, looking at the price to book versus share price. Here it is. And we'll have a look at that when I go through Charter Hall, because it is really interesting what's happened to this company over the past few years. Anyway, first REIT we're going to look at is the one that's had a soft spot in my heart, or whatever you want to call it, and that's Dexus Convenience Retail. And the first image we have here is of a fuel stop. No sure where that is. Does it say here? No, it doesn't say where it is. Anyway, I did write down all the pages I want to look at, hopefully making it quicker. So the first thing I want to look at is page 6 here, key metrics. So some of the key metrics I want to look at in regards to all these REITs are portfolio size, which is probably less important. WACR, which is weighted average capitalization rate, 6.1%. Now, because I don't have a long history of doing research in this area, there is a little bit of lingo, a few acronyms I was unsure about, and not only unsure about, I was maybe misguided in relation to, for instance, WACR, or the capitalization rate. I thought maybe a higher capitalization rate would be better, but based off some of the comments or some of the commentary I did see in these REITs, that's not the way it is. You want a lower WACR. I did try to do a bit of research on why, and it seems like it's linked to valuation of property. So, and also risk of property. So if you have a higher WACR, a higher risk there, and you can sell your property for not as much as a lower WACR. And WACR, or capitalization rate, I believe is, if you try to calculate it, it's income over property value. So if you have a capitalization rate over, which is equal to income over value, just mix it around a bit. So that means value is equal to income over capitalization rate. That's why WACR is linked to valuation and how much you can sell your property for. The other thing I like to look at is occupancy rate. Most of these REITs have pretty high occupancy rate. So I'm not exactly sure what a high one is, but I do know that, say, in New York City, the occupancy of many office spaces are less than 50%. So you want a high occupancy rate, which makes sense. That's sort of self-explanatory. 99.4% for Dexus Convenience Retail. Wale, weighted average lease expiry 9.7 year, which is not much less than the Long Wale Charter Hall. 31.8% gearing. This is also very important. So most REITs have borrowings or loans. And the very fact is, because we have seen interest rates rise, the finance costs of most REITs have ballooned over the past year, which has affected their financial performance, particularly in funds from operation and distribution back to shareholders. Distribution yield greater than 8%. And that might be the attractive thing about some of these REITs, some of their distribution yield, and view distribution yield as the dividend yield, because distribution and dividend is sort of the same thing. That's greater than 8%. So that's the main metrics we'll be looking at. The one thing they haven't included here in the key metrics is FFO, but we can just see here in the financial year 23 highlights, the first thing they mention in regards to deliver guidance, FFO and distributions of 21.6. So keep that FFO or remember that FFO, because I'm going to talk about their financial year guidance, financial year 24 guidance, whether they're guiding FFO to increase or decrease. And the reason they guide FFO is because I would say the majority of investors in this space want to know about FFO, because that's the dividend they get back, or the distribution they get back from the REIT. On to financial results on page 10. So if you do like these sort of companies or REITs, just go through their presentations. A lot of nice information here. Now, I like the way Dexus put out their financial results. You'll see this very similar in Dexus Industria. So I'm not sure whether to describe these REITs or Dexus as the company and these REITs as sort of within that company. So I'm not sure if to say Dexus is the company and this is the REIT. Dexus Convenience Retail is a REIT and Dexus Industria is a REIT, but Dexus is the company. Anyway, so some of the things I look at when it comes to financial year 23 results for REITs is property FFO, net finance costs, FFO cents per security, distribution cents per security, payout ratio, and NTA. And they've got all that right here in their financial results. Property FFO actually increased 6.9%. But unfortunately, because of rising interest rates, in fact, primarily driven by higher floating interest rates, net finance costs actually rose 53%. So even though property FFO increased because of rising interest rates, overall FFO actually fell 4.3%. Now the majority, and the FFO cents per security fell 5.3% to 21.6 cents. Now most companies or most REITs distribute the majority of the FFO back to their shareholders in turn or in the way of distributions. And for Dexus Convenience Retail, that payout ratio is 100%. Last year it was 101.3%, but 100%. You'll see that for most REITs as well. So that's why FFO is really important, because shareholders will say, well, if your FFO is this amount, that's what I'll get back in the way of distributions. and NTA per security, $3.75, falling from $4.03 1 year ago. Now, primarily driven by property devaluations. Now, one thing you'll probably notice, I have not mentioned about profits and losses. I don't care about profit and losses for REITs, simply because whether a REIT is profitable or loss-making is all driven by property valuations or devaluations. In fact, I wouldn't even have a clue what the loss or profit for these REITs are. In fact, I don't think the management care. I don't think shareholders care at all. It's all about funds from operation and also net tangible asset per security. Now, I would suggest that if the NTA per security has fallen because of property devaluations, that might have come to an end, because it seems like the bottom of the cycle in property market has been reached, and now we're seeing property prices rise. So it's very important to compare NTA per security, 375, to the share price. So what is the share price of DXC? 255, 375. So at this point in time, Dexus Convenience Retail is trading at a significant discount to their NTA. We're talking about 33% discount to the NTA. But mind you, the whole reason I started doing research in REITs last year was because they were all trading at a discount to NTA back then. So you might say, well, now's a good time to buy these REITs because they're trading at a discount. Eventually, everything's going to revert to the mean, and the share price should go back up to meet or head towards the NTA. But 1 year ago, I thought I was thinking the same thing. Well, not thinking the same thing. And 1 year ago, the share price of this REIT was $3. Now it's $2.55. So even though this company is trading at a discount to NTA, same thing was argued last year. Yet the share price has fallen. So NTA has fallen, share price has fallen. Is that going to happen in the next year? Will NTA fall? And that would mean possibly the share price falls as well. Who knows? I don't know. But when you do look at the chart, it looks pretty ordinary at this point in time. But we'll have a look at the chart a little bit later on, because there's still a few things I want to talk about when it comes to Dexus Retail. Another thing I want to talk about is their gearing or their balance sheet. This is very important. So the gearing, 31.8%. So that's within their range, their acceptable range. Do they talk about the acceptable range anywhere? I'm not sure if they do. $263.4 million of total borrowings. They talk about the acceptable range. Most of the other REITs do. Yep, they do, up in this part here, page whatever it is. So 31.8% gearing within 25 to 40% target range. Now, they don't mention look through, which I'll discuss when we talk about Charter Hall and Dexus Industria. So we'll just say they have no look through. And property valuations. So some of these have been revalued downward. They've also made divestments. And one of the announcements this company released not long ago was one of the divestments was a store or a fuel stop I go past all the time, which I might talk about in a second. And transactions, yeah, here it is. So $52.3 million of investments. And one of those was 983 Waterworks Road, The Gap. Another one was 282 Water Street, Enogra. And I go past those two fuel stations or fuel stops quite often. So another thing I like about these presentations is just going through their assets. So this is their network overview. So they have quite a few assets. The majority of Dexus Convenience Retail's assets are in Queensland. So 63 properties in Queensland valued at $471 million, 23% exposure. No, that's probably not important. And weirdly enough, not much exposure in Victoria. In fact, they only have 2 properties in Victoria valued at $11 million. So by far, I think it's safe to say that the majority of this company's exposure is in Queensland, which may not be a bad thing, particularly in southeast Queensland, because this area of the country, we are seeing significant growth in terms of population, and we are going to see significant growth in population over the next 5, 10, 20 years. And actually, they do talk about one of their projects they are working on right now, and hopefully they do talk about that later, or I will talk about that later. But when you look at their tenancy mix, so I've already mentioned this company invests all their assets are mostly in fuel stops, that sort of thing. And that's fairly clear when you look at their tenants. 33% Chevron, 13% 7-Eleven, 12% Viva Energy, EG Australia at 10%, Mobil 5%. We also have BP, Coles Express, Ampol, United OTR, QSR, and other national tenants. 7% of income derived through Hungry Jack's, McDonald's, Subway, KFC, etc., which is understandable because most of us, when we go on road trips, I'll say most of us, when we go on road trips, we do like that convenience of a fuel stop right at the side of the highway. So if you're traveling on a dual carriageway, you don't want to go into a town, that sort of thing. You just want to stop at these convenient fuel stops and maybe fill up your tank and then have breakfast or lunch. I think I've already talked about that. And here is that Glasshouse Mountains. The reason this might be argued as being exciting, this is sort of in between Brisbane and Sunshine Coast. And this part of this part of the country is going to be expanding greatly. And that highway, I think it's called M1, could be mistaken. That highway between Sunshine Coast and Gold Coast, I think they're going to have to expand it because the traffic along that highway is just going to increase and increase and increase over the next decade or two. The only way it won't increase is if someone invents teleportation, and that would completely affect not only Dexus convenience retail, but that would affect so many industries. I think that may be all I really want to talk about when it comes to, and then talk about guidance. So, they did mention guidance on page 15. Here it is. So, all REITs mention guidance. So remember, the FFO, funds from operations, of Dexus Convenience Retail in financial year 22 was 21.6. They're guiding for FFO and distributions of between 20.7 and 21.1, which is lower from this year. So maybe the bottom hasn't quite been reached for these REITs, or since the market is forward-looking, potentially the bottom will be soon reached because the market might be expecting, with dropping interest rates, which is expected within the next year, these companies will benefit from dropping or falling interest rates. But still, if they do achieve FFO of between 20.7 and 21.1, that's a distribution yield of over 8% based off the share price as at 4th of August 2023. Now, let's have a look at the share price or the chart. Now, this company or this REIT has been around since 2017, middle of 2017. And not only that, the share price right now is the lowest it's ever been. Within the last month or so, the lowest it's ever been. So we did see the share price of this REIT get as low as $2.60 in the middle of 2018, as low as $2.40 during the COVID-19 financial panic, but wasn't there for very long. It reached $2.60 in June of last year. Now it's fallen through $2.60, which is a nice little support level, but now it's resistance. And we can see, as we have a look at the daily chart, that resistance level, it fell through that, it has tested it a couple of times. So that now is definitely resistance. But I think possibly with a distribution yield of 8%, with the share price below levels it's ever seen before, with potential tailwinds becoming true in the next year with dropping interest rates, falling interest rates, possibly, I'm just saying this, possibly the bottom has been reached. Now, you could have argued that 1 year ago because this company this REIT was trading at a significant discount to NTA. But again, NTA has dropped, share price has dropped with it. But anyway, that's really all I want to talk about. Dexus Convenience Retail, intriguing, distribution yield is nice. I think the assets they have, I think, are pretty safe. I can't see those assets being highly affected by even a recession. People are still going to drive, go on road trips, that sort of thing. Now on to Charter Hall Long Wale. Now there's a few red flags I did see when I looked at this. Few red flags. So just by the name Long Wale, you would expect the WALE for this company to be quite high. A little bit lower than I expected, but they do have quite a few properties with really long WALEs. We're talking about 30 years or something silly like that. So ridiculous things here to start off with. Nice little picture of a pub. So more than likely they own some pubs. Well, not own pubs, but yeah, own pubs. They lease pubs out. Distribution center. Yep, distribution center. So you can just see by some of the pictures here what they do, or some of the assets they have. They also have a fuel station. So So first thing I want to look at is the highlights. So they mentioned something a little bit different than some of the other REITs. They actually have earnings per share, 28 cents per security, but that's sort of the same as distribution. And keep that number in mind, 28 cents per security. So we will have a look at the financial year 24 guidance later in this presentation. 11.2 year Wale. I did expect that to be a little bit higher. 99.9% occupancy, so almost 100%. It'd be rare, I think, even for REITs, industrial REITs, to have 100% occupancy, but 99.9%, probably as high as you could ever see. $5.63 NTA. Okay, so how much is this REIT trading at a discount? Share price, $3.65. That's a pretty big discount. So we're talking about 256, we're talking about a 35% discount, which I suppose is fairly normal among REITs right now. Now, the interesting thing about Charter Hall Long Wale is the market reaction to their results. So this is the only REIT that I've seen a negative reaction. The share price dropped almost 6% yesterday, has dropped a further 4% as I'm recording this video on 9th of August, and share price now is $3.65. And that is really important when we look at the chart. 365, I already know this just by looking at the chart once, that 365 is a really important level, possibly a buy-in point right now when it comes to share price, just possibly. So let's have a look further at, what's it called? Charter Hall Long Wale. I don't care about ESG, financial performance. So a little bit different than Dexus. In fact, I prefer the way Dexus has presented their information. So Charter Hall does their table a little bit different. They have financial year 22 on the left, financial year 23 on the right. I'm pretty sure Dexus has financial year 23 on the left, financial year 22 on the right. But operating earnings down 2.3%. And the main reason operating earnings are down 2.3% is because of finance costs. Interest rates rising, finance costs are really important, and that's driven by high interest rates. They actually mentioned that in the commentary. Finance costs increase driven by high interest rates. Again, high interest rates are bad for REITs. If you actually have a look at net property income, actually up 10.6%. Operating expenses down up 16.5%. So again, operating earnings down because of finance, or primarily because of finance costs. Operating earnings and distribution, same number here, down from 30.5 to 28, down 8.2%. Another thing I want to look at here is balance sheet. Balance sheet, yeah. NTA, again, down from 617 to 563, primarily driven by property devaluation. They've also made some divestments, but also acquired some property. In fact, they acquired $109 million worth of property, divested $114 million, and there is a possibility they might have to divest more investments. I'll talk about that in a second. Now onto capital management. This is where it gets interesting when it comes to a Charter Hall Long Wale, particularly the way they separate their gearing to look-through gearing. So they have a balance sheet gearing, so it's very important, the terminology they've used, balance sheet gearing. And you'll see the differences between Charter Hall Long Wale and Dexus Industria. So balance sheet gearing is 32.9% within the target 25 to 35% range. But in this key metrics table, they have balance sheet gearing at 32.9% and look-through gearing at 40.1%. Now, I wouldn't say I'm the biggest expert of look-through, and the way I look at look-through is not in terms of gearing, but in fact in terms of income. So the best way to describe look-through, say, income is, and this is true in the United States, if you have a company that owns another company and that company they own has dividends, sometimes that dividends isn't recognized as income through accounting standards by the company that owns that other company, unless they own 100% of the company. I did hear Warren Buffett talk about this, that sometimes all that profit, all that income isn't recognized, and that income is called look-through if you want to recognize it. So it's just weird that sometimes if you own a company and that company has dividends, you don't recognize it based off accounting. It's weird. So the way I look through gearing, I could be completely mistaken by this, is this company has some assets or investments, and those assets or investments have debt, and that's what look through gearing is. And 40.1% is more than the target range of 25 to 35%. And it's really interesting. They've separated balance sheet gearing to look through gearing. So I want to be more conservative. So the way I look at Charter Hall Long Wale is their gearing is 40.1%, which is higher than their target range. Now, I think it's safe to be conservative in this, and maybe I'm being a little bit too harsh on Charter Hall Long Wale, but I think look through gearing is, or probably is, quite important. And I think it really is the better way to judge the performance of a company. Just like look through income. If you own assets or another company that has dividends, you're receiving those dividends, you should be able to recognize that as income, but that's not necessarily true. Hopefully that is understandable. So next thing I want to look at, I think that was page 12. Yeah. So next thing I want to look at is probably the tenants. Then here they talk about their investments and their investments. Don't really want to go through that. Talk about some of their sectors, so industrial logistics, office, social infrastructure, agri-logistics, which I might talk about in a second. I really want to talk about their tenants. And so although their gearing maybe is a red flag, what's not a red flag is their tenants, particularly their major tenants. We're talking about government. This is stable. So Australia government, New South Wales government, West Australia, South Australia, Queensland, Brisbane City Council, and Australia Post, 19%. Endeavour Group, 19%. So I'm assuming most of those assets in that area are just pubs, because Endeavour Group owns pubs and liquor stores, that sort of thing. Telstra, 13%, BP, 10%, Ingham's, which is their agri-logistics, 5%, Coles Group, 4%, Match Cash, 4%. So David Jones, Arnott's Group, which is food manufacturing, if you don't know, Myer, Barnings Warehouse, Westpac, Australian Red Cross, Viola. So some really good tenants among this list, high quality tenants among this list, maybe except for David Jones. Anyway, so 19% in government, pubs and bottle shops, 19%, telecommunications, 13%, grocery and distribution, 10%, fuel and convenience, 10%, food manufacturing, 8%, waste and recycling management, 2%, and other 18%. And then the long portfolio Wale. So I think I might have mentioned, even though the average is 11.2 years, there are some assets where the Wale is more than 23 years, for financial year 45 plus at 8.1%. Okay. Is that all I want to talk about? 28. Oh, financial year 24 guidance, of course. This is very important. And possibly one of the reasons why the share price did decrease upon the release of these results is that they are forecasting earnings per share guidance of 26 cents, which is a decrease from this year, which was 28 cents, represents a distribution yield of 6.5%. But that's based off the share price being $4.03. Share price now is 10% lower than that, which means the distribution yield on the share price, which it is now, would be more than 7%. Not quite as high as Dexus Convenience Retail, and probably there would be an argument which one's a better quality. I might be leaning more towards Dexus Convenience Retail just because of the gearing in Charter Hall Long Wale, but whatever floats your boat. And I suppose the last thing I want to talk about here, so breakdown, geographic breakdown, sector breakdown, that's all good. So a nice distribution between the states, and 33% New South Wales, 22% Victoria, 18% Queensland. So it seems to be highly correlated, fairly highly correlated to population. Oh, this is the other thing I really like about these presentations. They go in depth to the individual property. Not this page, but the next page here. So each of their assets in their portfolio, for instance, National Archives in Chester Hill, also the valuation of that asset, cap rate, Wale and occupancy, Electrolux in Beverley, Metcash Distribution Centre in Canning Vale, Coles Distribution Centre at Perth Airport. The highest valuation here is Arnott's at Huntingwood, 292.5 million, REIT interest 50%. So quite a few assets here, a lot of assets here. Brisbane City Council Bus Network Terminal. I had no idea they owned that. And also Geoscience Australia. There you go. In fact, they've got a picture of Geoscience Australia right there. And then we go to the Agri Logistics, which is just hatcheries for Ingham's in Queensland and South Australia. So I think that's all. Oh, look, a glossary. Okay, this is really important. If you don't know some acronyms or some terminology, glossary, I think a lot of these presentations, they do have a glossary. For instance, if you don't know what look-through gearing is, they have an explanation here. Their explanation is probably a little bit more. Let's have a look. I'm going to go through this definition of look-through gearing just to see if it's the same sort of definition I would say. Calculate as a ratio of net drawn debt, excluding unamortized debt establishment costs to total tangible assets. I'm getting bored already. Less cash based on the blah, 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 which is just for the REIT's share of the debt, assets and cash held in equity accounted investments. So that was sort of the definition I was thinking about, the REIT's share of the debt held in investments. So to also talk about it's a REIT, Real Estate Investment Trust. WACR, if you don't know the acronym of that, what's the meaning? Wale, WARR. If you don't know what ASX means, it means Australian Securities Exchange. Well, anyway. So that's all I got. Oh, the chart. Okay, we're going to have to look at the weekly chart for whatever this one's called, Charter Hall Long Wale, because this is where it becomes interesting for this company. Remember I said $3.65 is a really important level for this company. Why is $3.65 very important? Let's have a look at the weekly chart going all the way back to when this REIT listed, which was way back in 2016. The share price of this REIT has never gotten below $3.65 for very long. It fell through that level for a very brief period. In the second week it listed, it got just to that level in 2018, then bounced. It got to this level in the COVID-19 financial panic, but there was a massive bounce, fairly quick bounce. In fact, the share price got as low as $3.50, and right now it's on $3.65. So just by looking at this chart, just by realizing all the tailwinds these sort of REITs have experienced, potentially this is the best it's going to get in terms of valuation. So that's just saying possibly. I'm a little bit concerned by how much the share price has fallen in a few days. If the share price keeps on decreasing, gets to another low, particularly if it falls below $3.50, that would be bearish. But I would think that there will be investors out there, particularly value investors, who will eventually see value in this REIT, and that will support the share price. So I could even think about doing a little sneaky buy at $3.65 because it's at support right now and the valuation of this REIT. Now, the question comes back to quality, and my one concern is just that gearing. Anyway, Charter Hall, what's it called? Long Wale. Now on to Dexus Industria. So this is industrial. It's in the name, Dexus Industrial. I probably prefer Dexus over Charter Hall just because of the presentation. It's probably pretty bad to compare companies based off presentations. So let's go look at Dexus Industria. Key metrics, 1.6 billion. WACR, 5.4. Occupancy at 97.5%. So a little bit lower than the other two REITs, but 97.5% seems okay, I suppose. 6.3-year WALE, 50% income linked to CPI, 5.9% distribution yield, which is a little bit lower than the Dexus's other REIT, convenience retail, and only trading a 19% discount to NTA, which is a little bit lower than the others, which is understandable because I would suggest, because this is industrial REIT, that there is preferential, this company or this REIT gets preferential treatment simply because it's in the better space, the better area. If you had an office REIT, if I was showing you an office REIT today, more than likely that's trading at a more significant discount to NTA because of the potential future, massive future headwinds for those sort of REITs. Okay, FFO of 17.1%, distribution of 16.4. Straight away, payout ratio is actually less than 100. It's quite a bit less than 100. Maybe not quite a bit, but definitely less than 100. Anything else exciting there? Gearing, pro forma look-through gearing. It was really interesting that instead of separating balance sheet gearing and look-through gearing, they just said look-through gearing is 27.3% below their target range. And this is another reason why I'm a little more skeptical about Charter Hall Long Wale, particularly how they've separated balance sheet gearing to look-through gearing, simply because of what Dexus Industria have done here. They just said, how look-through gearing is 27.3%, below 30.4%. They've also got a little bit at the bottom here. It's not relevant. Anything else I want to talk about in this slide? No. This slide, I don't care about ESG. Okay, so very similar to Dexus Convenience Retail. So the main things we're looking for here is property FFO, which has increased 13.3%, but net finance costs increased 48.9% because of rising interest rates. There's also mentioned here as well as higher average look-through debt. So because of net finance costs increasing by a higher or greater rate than property FFO, FFO per security has dropped 7.2% from 18.5 to 17.1, and distribution drops 5.2%, and they don't have a 100% payout ratio, but that is up to 95.7% in financial year 23. Now on to the NTA, $3.44. Not much of a drop from last year, which was $3.60. So let's have a look at the discount. We know it's not going to be quite as much as DXI, not as much as the other two REITs. And in fact, the share price has risen today, $2.81. So a little bit of a discount, but not a massive discount. So what's that? 63 cents. So not quite 20%. So again, we'll say about 18% discount to NTA. Anything else I want to show you here? Oh yeah, balance sheet. So again, gearing, look through. So they haven't separated. Actually, they do have separated. So balance sheet gearing 20.4%, gearing look through at 27.3%. So they actually have separated the balance sheet gearing and the look through gearing in the key metrics. So maybe I am being a little bit too much for Charter Hall, but again, pro forma gearing of 27.3%, which is gearing look through. It's not balance sheet gearing. That is not what Charter Hall Long Wale did. They did something a little bit different. Portfolio valuation movements, changes or revaluations of portfolios, and what kind of property does this company own? That's the next thing I want to know. So we have to go down. They do talk about Jandakot, which is WA, Perth. So they must have quite a bit of property in Perth area. Also talking about Brisbane Technology Park. I have no idea what that is in Brisbane, even though I live in Brisbane. Financial year 24 guidance. Oh, this is important. Financial year 24 guidance. So expects FFO of 17.1 and distribution of 16.4. So remember, 17.1. Now I've got to go back up because I didn't write down there. 17.1. Right there. 17.1, 16.4. That's exactly the same as this year. So, yeah, okay. So unlike other REITs where they're expecting a drop in FFO and distribution, this company is not expecting a drop. Again, probably why this is more favored. Okay, now on to geographical presence. And just by looking at the geographical distribution of their assets, there's a nice distribution, more swayed towards WA, 28% of the portfolio, and Victoria, 29%, also 20% in New South Wales and Queensland, 4% in South Australia, and they've completely ignored NT. Now on to, well, this is interesting. Lack of available space has led to a rapid growth in rents. That will definitely benefit. Vacancy rates hit record lows across all markets, and that would have an impact on rents. Okay, maybe that's another reason why fund managers are bullish on this REIT. Now on to the tenancy mix. Well, this is really interesting. So wide range of different tenants, maybe not quite as high quality as some of the other REITs. Westtrack, 16%. Australian Postal Corporation, 4%. Cube, 3%. Sandvik, Thornton Engineering, AAE Retail, Interactive, Autopact, Victoria, Radio Frequency Systems, Kmart, Marley Spoon, Woolworths, Downer, Toshiba, HelloFresh, Amazon, Thermo Fisher Scientific, GE, Seymour White, Miele, M-I-E-L-E. Is that how I pronounce that? So nice distribution. Antiotech. Here's Jandakot again. So they're really focusing on Jandakot. And is that all I want to talk about? Some divestments they've made, independent valuations. Which one's the highest? 13 West Track Drive, Tomago, New South Wales, 286 million. Well, total that's total industrial. Jandakot, maybe that's why they're really focusing on Jandakot. Stabilized portfolio at 331.7 valuation. That's probably why. It looks like that's their highest valued property or asset. And that's all I want to talk about when it comes to Dexus Industrial. Let's have a look at the chart. Dexus Industria. For some reason, they decided not to use L. So this hasn't been around for very long. Let's have a look at the daily chart. So it's only been around, according to this chart, since, what was it, late 2021? But the price has dropped. Not as bad as the other two REITs. The low in this particular REIT was September last year at $2.35. Now it's $2.81. So a little bit, not as bad as particularly Charter Hall, Long Wale. And I think mainly because this is industrial linked. Anyway, that's all I've got for Dexus Industria. Now on to the one REIT I didn't know anything about, simply because in the name there's no suggestion, there's no hint at what this REIT does, but the very fact they have Bunnings Warehouse picture on their first page, or their sort of their, what do you call the first page? The not the home page, whatever you call the first page. The title page probably is a hint that they have a fair bit of investments in or property in Bunnings or maybe Wesfarmers, hint, hint. Anyway, what I want to talk about when it comes to NPR. Now, this is a completely different, the TIG code is NPR, and that's easy to remember because of NPR radio in America, which is National Public Radio. I think it's national. Could be somebody else. Anyway, so financial year 23 highlights. FFO of 7.8 cents per unit. They delivered on their guidance. Achieved 100% occupancy. That's interesting. They are doing an on-market security buyback. Portfolio size had 542 million, 6.2 years Wale. No major expiries in the next 2 years. There are a few things they didn't include in that highlights section, but we can go through it. So FFO of 7.8, but the distribution is 9. That distribution is much higher. Net tangible assets at $1.85. So what is the share price of NPR right now? $1.19. Significant discount. We're talking about at least a 33-35% discount to NTA. WACR at 5.1%, 36.6% gearing. Wondering if that's within their range. More than likely, it's probably within their range. See if they do mention that anywhere. Not yet. Portfolio snapshot. So we're getting straight into this already. And all the assets in Eastern Australia, 46% in Victoria, 22% in Queensland, 21% New South Wales, 11% Tasmania, nothing in South Australia, nothing in West Australia, nothing in NT. They say they have 9 assets. Yeah, 9 high-quality assets. That's 72.9% leased to Wesfarmers. So we're talking about Bunnings, Officeworks, Kmart, Target, that sort of thing. 6.8 years Bunnings Wale, so they are reliant on Bunnings, which maybe is not a bad thing. Here we go. So Bunnings, Kmart, Officeworks, 72.9%. Also Petstock, which is there's a store just near me. JB Hi-Fi, Good Guys, E&S, which I know nothing about, and Freedom. So not many assets, but secure, high-quality assets, particularly JB Hi-Fi, Wesfarmers. And okay, this is where it gets interesting. This is where I learned a little bit. So I wasn't sure about weighted average cap rates, whether a high number was better or worse, until I saw this particular announcement. And they actually said here, weighted average cap rate softened from 4.7% to 5.1. So the word softened is not good. So you want strengthened. And then I did a little bit of research. Why would that be? So there is a relationship between WACR and risk. So the higher the WACR tends to be increased risk. And there's also a relationship between WACR and valuation, because if you look at the formula, the cap rate is equal to the income over the valuation of the property. So if you just do some easy mathematics, it means the valuation is equal to the income over the cap rate. So if the cap rate actually increases, is a suggestion that the value has dropped. And I did read that somewhere. Anyway, 6 properties independently valued. Valuation decreases by 6% or 3%, which is understandable. NTA dropped from $1.96 to $1.85, which is understandable. Here is the history of NTA. So they IPO'd not that long ago, and the NTA actually did increase to $1.98. Has decreased a little bit, but I would expect that to increase over time. You would expect it. A Bunnings Preston update means nothing. One of the largest Bunnings in Australia. Where's Preston? No idea. It's probably Melbourne. Underpin, blah, blah, blah. What else do I want to show you here? Financials, 17. Okay. So very similar to Dexus Convenience and Dexus Industrial. So although they do mention profit or loss here. So last year they had a profit of 51.8 million. This year a loss of 8.9 million. So the reason why they went from a profit to a loss, valuation of property. So they have an FFO of 14 and adjusted funds from operations of 13.3. Finance costs up from 4.5 million to 8.2 million. And here we have their balance sheet. Capital management gearing increased significantly from 25.5% to 36.6%. And in fact, they say post-settlement of Preston and Underwood, gearing will increase to approximately 45%, continuing to explore various strategies to reduce gearing. So that is a red flag for me, that it looks like they're going to have to find ways to decrease that gearing. And outlook. So last thing I want to look at is the outlook, guiding for earnings and distribution of 7.6 cents per unit, which is down a little bit from this year, which was 7.8 cents per unit. That's really all I want to talk about when it comes to, they do have an appendix, and they have, a lot of these companies, or a lot of these presentations have appendices, a lot of information in here about, they talk about the whole history of Newmark Property, started in 2011 by Chris Langford and Simon Morris, talking about all the acquisitions they've made, lots of acquisitions. 33% CAGR in terms of assets under management, which is understandable because they keep making acquisitions. To make acquisitions, they go into debt. There's a management if you want to know. Yeah, that's all I want to talk about. Oh, property valuations. Where are their properties? That sort of thing. I just want to know. Preston, Chadstone. Yeah, Preston's in Victoria. Property valued 84 million. Maroochydore, Underwood in Queensland. Anyway, I'm going to stop it here. If you like this REIT, maybe go through all these properties they have. I suppose they could go through all their properties because they only have 6 or whatever it was. Anyway, last thing we're going to look at is the chart for, I forget the name of it, NPR, net something, Netmark. Hasn't been around long, so we can just look at the daily chart. So, and, it's an ugly looking chart. Share price has been a downtrend ever since they listed. Share price $1.92, which would have been near the NTA. Now it's $1.19, and share price in a downtrend. But really, it's at a pretty good discount to NTA. Now, the last thing I want to show you is this. Just decrease the camera. She'll bring it over here now too. So this is looking at Charter Hall Long Wale and comparing price to the price to book. So price to book is sort of the inverse to the discount to NTA. So if it's a discount to NTA of 33%, that means the price to book should be at approximately 0.67. So I just wanted to see the history. Do most REITs trade at a discount to NTA? That's the whole reason I want to look at this. But if you go back to 2017 and 18, this was trading at a premium to NTA, particularly in 2018 to 2020. In fact, just prior to the COVID-19 financial panic, this particular REIT was trading at a significant premium to book value, or NTA. In fact, the price to book got up to 1.4. Right now, the price to book of this is 0.6. You can see the big difference between the price, share price, and the price to book, which means as interest rates rise, that difference between the two gets larger and larger. So if we see a scenario where interest rates start to fall, we should see that contract, that distance contract, and that's when the share price should start increasing, you would think. And then the price to book starts increasing, and that's where you might get some value in picking up these REITs at cheaper prices, at good valuations like they are now, if you believe interest rates will fall significantly over the next few years. Now, we could do this for, which one was the next time longer listed? It was Dexus Convenience. We can do the same thing with Dexus Convenience. Just compare. What we'll do is go to the interactive chart, price and price to book. Oh, this is a little bit more messy because the price to book has fluctuated a lot. So it's not perfect. I don't think for some reason Guru Focus has NTA or something like that in it. I tried to go through it, but I couldn't find it. Also, search for it. There's nothing in there. So if you search for NTA, they have intangible assets, net intangible assets, percentage price escalator. Anyway, the main thing I'd probably look at when it comes to Guru Focus is just price to book. So the main thing is most of these REITs are trading a discount to NTA, and based off Charter Hall Long Wale, that's not always the case. So these are unusual years in terms of REITs, but that's because of rising interest rates. If we start seeing interest rate drop, these sort of investment vehicles, REITs, might become really attractive investments. So I'll keep an eye on how these REITs perform. And if we do start to see interest rates drop, possibly investments. In fact, even before that, you might see the chance of these companies or these REITs turn around as the market anticipates interest rates dropping. So really, that's all I have for this video today on 4 REITs: Dexus in Convenience Retail, Charter Hall Long Wale, Dexus Industria, and Newmark Property. If you have any questions about REITs, if maybe I've made a mistake in any of my explanations of some of the acronyms, of the lingo, I'd love to hear your opinion, your thoughts. So leave that in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.